Yeah, I'm losing my edge.
Today, Michael, we have specific entertainment for small stakes fans. You and I are talking about buying stock, shares versus futures. This is going to be a regular Friday spot here for Michael on the Small Stakes Show, and he brings a very different but much needed viewpoint to the show, which is just like, all right, like Frank and Pete are talking about buying US dollars, but then substituting the short yen component with a long micro yen future, and they're getting so far upstream. What about just like if I replicated the small stock 75 with fractional shares? And that was the idea you had today, and it's going to be a fun one. So what was the premise behind wanting to look at small stock 75 index and then replicating it with some shares?
Sure. So I am a new college grad, and all my friends kind of know I'm working in finance, and they know I'm working for a small exchange. They don't quite know what that means. And I basically tell them we're building a more capitally efficient stock market. And usually that resonates with them on some level. But all of my friends are very excited about this idea called fractionalized shares.
Yeah.
And it has a really nice sound to it. It has a great ring. It's super cool. I can buy a company I want for $1. I can buy Amazon now. But you're kind of missing the boat. I mean, Amazon is expensive. Apple is $450 a share. I want exposure to those companies, but I don't want a dollar's worth.
It's like a classic concept in finance, Michael, that Schwab and Robinhood and these companies are like pitching as like the most revolutionary, like pinnacle of empowerment in trading. But at the end of the day, as we're going to get to today, yes, you can buy as little as $1 of Amazon, but how empowering is it, in the long term to be able to do that? And you're totally right. It's a buzzwordy thing. Like 5 years ago, it was blockchain, and everyone was like, oh, we need to build a blockchain. And now it's like, oh, fractionalized shares in trading. You are just empowered. You can do anything with these fractionalized shares. And I guess you can, in theory, buy $1 worth of any stock, which is nice, but it's not reducing cost necessarily. And we'll get to that in a second. But let's take a step back, Michael, and just talk about the small stock 75 being split up into 5 sectors here. And a big reason behind why we did that was exactly what you hit on. We are creating indices that then are tracked by futures that you can invest in and create the most capitally efficient investment that's out there. And with that in mind, we were like, okay, well, let's create a very diversified stock market here so that for one trade and for one capitally efficient price, people can get great diversification for 5 different sectors.
Mm-hmm. And this is not your grandfather's index anymore. I mean, the small stock 75, the methodology behind this, it's credited to our whole product development team here, but there was a lot of thought into what sectors go into this index and how we choose the constituents that comprise it. So it's not like, okay, let's just make an S&P 500. No, I mean, there's nothing too novel there. I mean, there's a lot of unique features here with this product, namely the sectors, but also this kind of rebalancing aspect. So you have kind of fresh names once a year within that sector.
And always trying to get to this very poorly formatted image that I've tacked on to what one of my favorite people at the company, Dean, made this very beautiful, succinct graphic that you can get all the sectors, and it's a stock product instantly. And then I just butcher it it's like I scribbled all over a piece of art here. But you got 15 stocks with relatively equal weights, and the rebalance subs in and out names that are relevant, and also it allows for any stocks that get really far out of line to come back to a relatively equal weight here. And it's the antithesis almost of the NASDAQ or the S&P 500 that has gotten so wildly taken out of proportion with its weightings due to market capitalizations that if you wanted to invest in a diversified market, Michael, and you chose the NASDAQ, you have literally chosen about 4 stocks. And like I said, the antithesis of what this diversification brings for investment. NASDAQ has its own purposes, but for investment purposes, wouldn't you feel better about relatively equal weightings for 15 stocks in each of 5 sectors, as opposed to 50% of the index being 4 stocks? I mean, that was the goal of this, right?
Sure. Yeah. 75 names, like kind of Donnie likes to say, spread the peanut butter around a little bit.
Sure.
You don't want a sandwich with just all peanut butter on one side and then a little bit on the other side. Like, evenly distributed. It's just a little more representative. And kind of the piece that is important to touch on is the cost of this exposure. I mean, even, we talk about NASDAQ quite a bit, and we talk about S&Ps, but if you wanted to buy 100 shares of S&Ps, which is arguably a little more diversified than something like NASDAQ, if you're buying the share equivalent, the SPY, it's $33,000.
Yeah, it's crazy.
I mean,
and this thing, and we prided ourselves on not only the stock product, but all products in the small exchange suite, moving around $100 a day and costing you under $1,000, hopefully closer to $100 to $500 per trade. And this one, I know this isn't universal, but the margin on this product right now is coming in around $500 to trade this. And we're going to get to kind of equating it to those shares and what the cost gets you per share in a second here. But yeah, it's just, if you are going to trade, and this is something that especially the last couple of weeks, as technology has really taken over, we have seen some criticism on this small stock 75, but because it's like, oh, why is NASDAQ's moving a bunch and this market isn't moving as much? And it's because NASDAQ is largely concentrated to a few stocks that just because of cyclicality are moving a lot right now. This market here, a large part of it was diversification for, a cost-effective investment. And so, yeah, you're going to sometimes see that NASDAQ piece, that technology piece that is still 1/5 of this peanut butter sandwich, like Michael said, just not, but since all the peanut butter isn't concentrated there, it's not moving as much. And what people will miss is when energy or financials become the technology of the next moment, that NASDAQ's not going to be moving. And then this piece, because it is so diversified, because it is grabbing all these different sectors and equally weighting them, this will be the moving piece. And what's nice about this, Michael, is that these factors all translate to a single price, the 75 colon SME index, and then a single point of investment, which is / SM75. And that's real simple, right? It's just, I've got one price that is the amalgam of 75 stocks that have relatively equal weights across 5 different sectors. You've given me one thing to say, okay, today it's trading at $52. I can buy it and just hope that it goes up as my long-term investment. Just a single price.
Yeah, I just kind of want to clarify this price and its beauty. The price of the SM75 Q20 is 51.04. Okay. You compare that to an existing index that's 3,372.75. I mean, what does that even mean?
And you chose even the less crazy one. The NASDAQ is what, 11,150 and 75 cents. How many numbers do you want to be in that index? Jeez.
I don't know. And now I hear the quotes. It's like NASDAQ up 150 points. What does that even mean? I mean, this is like a number I can digest a little bit. So it seems like a cleaner representation of stocks, which is exactly what it is. It's just a basket of stocks.
Basket of stocks, Michael. It's almost like you read these slides before the show. Because, it is just these share amounts, which for the sake of the next conversation we're going to have, are very fractional. Multiplying this share amount by the price of Apple, this Amazon share amount by the price of Amazon, and getting to that single price here. And you could replicate this index with fractional shares. It's an exercise that, in theory, a lot of people a lot of people like to look into, and I know on some platforms you can see all the components and them ticking individually, which is very useful and cool for certain purposes. But I know you have a story for this kind of process. But my whole thing is, I remember showing up at the board of trade and learning about something that maybe is going to go over some people's heads here. Not to be not to be mean or anything, but I traded interest rates, and each product has a DV01, and it's like a very like the DV01 for these ratios would be like something with like 4 or 5 decimal places. And I was like, oh, so what if I multiplied that by 1,000 and I did 367 10-year treasuries against 114 30-year treasuries to get it completely even? And they were like, that's really a crazy exercise. Just round it and use the simpler thing. And I know you have a much better story for this kind of process of replicating an index that's one single price into all of its 75 pieces.
Sure. So kind of the example I have, and yours is a great one, because why wouldn't you want to be perfectly hedged on your DV01 value with interest rates? It just makes intuitive sense. Mine is a little different period of my life. I was probably 5 years old. This is like one of my earliest memories as a kid. For some reason, we had gotten cookies in a kindergarten class or whatever, and I had one cookie and my neighbor had one cookie. And I'll credit them, creative idea was, if I take my cookie and I smash it into a bunch of pieces, I have more cookie. And I just remember this person smashing the cookie on their desk, like, what are you doing? Just eat one. You get the most cookie exposure you could get. So like, lopping off, if you were to try and construct the SM75 with these fractional components, which are all publicly available, you may want to just lop off 1 or 2 of these decimal places, you'd get something.
Well, that for sure. And as we're going to get to fractional shares in a second here, it's easy to kind of buy just $1 worth. And it is creative. And I understand it's this thing of like the futures, they're cost effective and I get one price. But people want to like own things. Like they want to have like, oh, I've got this many dollars worth of Apple and this many dollars worth of Amazon. Yep. But I'm telling you, like the exercise, whether it's me and DV01 or Michael and cookies, that kid ended up losing a bunch of cookies and he smashed it. He had to go wash his hands afterward. It's too much work to do all of that stuff. And I give you that. Sure. Fractional shares, Michael, do offer flexibility, because now I could buy $1 worth of all 75, get the equally weighted thing down. It's going to cost me $75 versus your futures that cost me $550. But here's the thing. There are a lot of small investors out there, small traders, Michael, as you and I have done so much recon on all different types of investors and traders, on all different kinds of age demographics and account type demographics. Very few people are trying to invest $75 worth of money for the next couple of years. Maybe they start at $75 and over the next months and years, they now have a few thousand or something like that. But very few people are like, I got $75. That's all I'm riding out with for the rest of my life in terms of my investment. And so when you look at the move relative to that cheaper cost here, Michael, it's not realistic, I guess, that you would have $75 and then want your investment on a monthly basis to just move $12. What you lost in efficiency here, and it's almost just it's not sustainable or really practical to do it that way. And to jump this thing up to, well, it's like, okay, I got the flexibility here of a $75 investment. I could do it by increments of 75 to get it to a point where I'm moving, maybe this full $800 a day, a month, or I'm moving half of that at $400. To get this full amount of movement, Michael, it's going to cost you $5,000. To get half of it, it's going to cost you $2,500. To get even a quarter of it, you want this investment to not move $12 a month, but $200 a month. It's still going to cost you over $1,000 relative to the $500 cost here of the small stock 75 futures.
Yeah, and I think this is an absolutely stellar point that a lot of people miss. And I'm not trying to diss fractionalized shares. It's kind of cool, but it's a false sense of efficiency, because you're taking a product that you see, Apple, $450, that you see it moving, maybe $5 a day. And you think scaling down to a portion of that, you're going to have that same movement. And you are on a percentage basis, but you're not getting any better bang for your buck.
Exactly.
And that's where the futures wrapper comes into it's highlight. That's why the futures product exists. Now you have a really efficient use of your funds. You're putting up $550 for $830 worth of monthly movement, as opposed to getting $12 of movement.
Yes, yeah, that $500 for $800 worth of movement relative to $75. Oh, it's cheaper for 12 for less amount of movement there. Yeah, you nailed it. It's like this false efficiency. It's this empowerment up to a point. You want true empowerment. Futures is letting you do more with your money, whereas fractional shares are just letting you chop your money or your cookie up into smaller pieces.
Don't smash your cookie, man.